Hi traders, welcome to this week's pre-weekly market review as we look at the pound dollar ahead of this week's major vote that's taking place in Scotland. Before we do so, let's have a quick recap on last week's market. The major move took place on the yen pairs, that's Japan, as the Bank of Japan came out and announced that it would add or take necessary measures to increase stimulus if needed, and the current rounds of QE that they were installing into the economy were not working. The result of that, quite simply, was an incredibly weakened yen. It continued, especially over the dollar yen, which broke out of its 105 levels now and shows possible next lines at about 110 dollar yen. Without further ado though, guys, let's look at this week's major technical pairs. We focused in on the USD CHF, that's the Swiss franc. We have Swiss interest rates out this week. And we can see here on a daily chart a very, very strong range here. This is a bullish channel, and we had a breakout from this channel last week. So there's a lot of buying pressure in the long term and possibilities for retracements now maybe in the short term. Again, here you see we broke out of the channel around 0.9260, and now we are above 93 levels. So you want to keep an eye there for continued buying on that pair over the course of the next few months. We can see there a weekly chart on the USD CHF. It has been oversold for quite some time, up to early levels in 2014. So there is a lot of room for recovery there, and future prices tend to indicate rises towards the 96 level and then maybe even the 98 level. Okay, here we've just drawn you that. So this is the current resistance line. There may be some short to mid-term pullbacks there, but in the long run, the levels above this point are obviously heading towards 96 and 98. Here you have these resistances. There's the last one. It's the fourth time, and now we're the fifth time at this price. And now we've drawn you here the 97 level, which was tested countless of times in 2013. And that's where you want to be focused, guys, for the long run. If we look here on a more zoomed out version of this chart, you can just see how oversold that market was to the left back in 2011, and now it's slowly creeping its way back up towards previous highs. Let's move on now, guys. We're going to move you to a New Zealand dollar pair. This pair was very, very heavily sold off last week after the interest rates announcements. There's rumours that they're going to reduce rates again this year, so any reduction of rates there could call for more and more sell-offs on this pair. We're at a very strong support level at the moment, just around the 81.30 level. And in the past, this used to be a resistance and support level. Now we can see there by the arrows how many times the market bounced off this wall. However, we should note that we are currently embarking on a much longer term sell-off trend for the New Zealand dollar after it reached such astronomical highs in 2012 and 13, and even at the beginning of 14. Here's the monthly chart. You can see it. It's a double top. Basically, the price rebounded quite heavily from here in 2010, and we've now hit that level on a monthly basis countless times in 2014, and so we expect continued reversals here on this New Zealand dollar. Main focus, guys, got to be the pound this week. Middle of the week and Thursday's market, of course, you have a very big announcement. It's a vote in Scotland for independence from Great Britain. Any vote in favour of that could spark tremendous sell-offs on this pound. We've already been seeing the sell-offs actually here. You can see a gap from last week that we've just shown you, which was filled. And so in the long term, you can see that we're actually trending now in this range. It's called a rising wedge pattern, which usually follows sharp sell-offs. And what I would say is that if we rebound now consistently and get a positive vote in favour of Scottish independence, we might see this retracing all the way down towards 58 levels and then possibly further. If we get negative data out from Scotland, maybe this pair will take a surprise and swing back towards 172 highs. That's pretty much it for this week, guys. Remember, the big news is coming out on Thursday, but we do have data coming out before then on Tuesday from Japan again, and also we have data coming out on the UK CPI. So we focused you there on the GBP against the JPY there with the Japanese data, and then later in the week against the dollar, obviously, on Thursday. So have a fantastic week and trade safe.